Hey listeners, Geoff Zimfer, thank you so much for tuning into another episode of the Mortgage Marketing Radio Podcast. If you are a first-time listener, welcome. Let me know. Reach out to me. Hit me up on the socials, right? Facebook is where we've got our podcast mortgage marketing community. So just go to Facebook, check us out at the Mortgage Marketing Radio Podcast group over there. Love to have you join the ongoing conversations and additional content and access to me. I'm popping in there and providing additional content and support for you. So check it out there. And if you're a longtime listener and you haven't yet checked out the Facebook group, please do so. And if you are feeling at all inclined to help us spread the word, reach more people, make a bigger impact in the mortgage space, hey, how about a little review, right? Love to hear your reviews. Love to know that we're actually having an impact with you. Let me give you a shout out to one of our most recent reviews. This is from Ethan. Ethan, who's got a long username over here on iTunes. Ethan 12975433366. That's one heck of a username there, Ethan. So Ethan just posted this on April 5th, man. So it's our newest and most recent review. We thank you. Awesome podcast with solid, actionable ideas applicable for people at different levels of production. Keeps me tuning in. All right. Love that. And Ethan, you got yourself a free podcast t-shirt. Okay. Here's what you do. You hit me up, message me on Facebook, bro. And let me know your shirt size, address, and we're going to take care of you. Thank you for that review. And your reviews always help, whether you're new or experienced. It's good to know that we're making a positive impact in you, in your business, in your life, helping you to navigate the choppy waters of being a mortgage loan professional in today's world. Speaking of having you help you navigate these choppy waters, hey, perhaps our community of Mortgage Marketing Pro members might be right for you. If you're looking to take your career to the next level, if you're looking for additional help, support, tools, resources, guidance, done for you content, we can help you there. One of the most common areas that my listeners ask for help with is succeeding in attracting and engaging with real estate agents and building referral partnerships. And that is an area of expertise, dare I say, dear listeners, as I've been helping loan officers do that for well over 10 years. And it was the number one source of my business as an originator, doing over 10 units a month. 78% of my business came referrals from real estate agents, from where you've been listening for a while by now, you know, teaching agent classes. And of the top interviews I've heard and done on this podcast and others, usually teaching agent classes is a key component of every top producer's strategy for multiple reasons. If you want to know why that works so well, go check out mortgagemarketing.pro. I put up an 8-minute video that explains everything. It might be right for you. Love to have you join us there in that growing community as well. And let's give a quick shout out to our friends over at the Industry Syndicate, right? So more real estate type shows there, media. It's the real estate industry's first media network. So access to more good stuff, real estate specific appraisal, right? So you might want to check that out. If you're looking for more good content, check them out at industrysyndicate.com. And with that said, that brings us now to my episode for today. Our very special guests, two esteemed gentlemen who I have a tremendous amount of respect for, Geoff Onofrio and Scott Nicholson, from two different parts of the country, coast to coast. We're going here from Jersey to California, from the Jersey shores to the California shores. We are talking all about renovation, this niche of renovation. And Geoff has done some amazing things, as well as Scott, of course, specific to the renovation space. And if you've ever wondered, like, how do I leverage reno loans? How do I build a brand around reno? If you're looking for a niche, if you're looking for a unique selling advantage, right? And you want to better understand this whole thing about reno and selling homes the HGTV way, how do I help realtors get past the perceptions and negative connotations they might have about rental loans? How do I perhaps present rental loans as an option to buyers? And of course, let's not forget the incredible opportunity with refis and rental loans. Folks, it's a huge market. It's underserved by many. Why? Because it takes a little bit of knowledge, takes a little bit of learning. It's not just your cookie cutter, right? 800 FICO, 20% down purchase. It's not your cookie cutter refi either. But in today's market, right, with this whole threat of, quote, disruption happening, oftentimes what helps you rise above the noise is, as I talk about a lot, is having a niche, standing out and being known for something. What are you known for, right? If it's great rates and great service, congratulations. You and 500,000 other loan officers are attempting to be known for great rates and great service. Folks, that's not enough. So maybe renovation loans are for you. I've got links in the show notes to our conversation, to the resources we talk about, like the awesome website of free resources that Geoff is offering through his website at renovatethis.com. You definitely want to go there and learn more. In today's episode, you're going to hear specific stories about how rental loans have not only helped increase production for both of these guys, help them capture realtor referral partnerships, and help them differentiate themselves in the local market and attract business to them. So we're going to unpack different types of rental loans there are, why reno, if it's right for you or not, how to help realtors better understand how to deal with rental loans, position and we're going to talk about the market opportunities here. And it's just a great education all about rental loans. So if you've ever wondered, is renovation a niche for you to pursue? This is the episode to listen to. So with that said, let's get into this week's show. Geoff and Scott, welcome to the show.
Thanks, Geoff. Thanks for having us.
Yeah, thanks for having us.
You bet. Now let's do this. As always, in the case for listeners, who aren't watching right now, let's identify by voice. We want to give a quick background bio, who each of you are. So Geoff, I'll let you go first. Tell us who you are, where you at, and a brief background on the mortgage industry.
Yep, thanks. Geoff Onofrio, National Director of Construction and Reno and National Production for Mortgage Possible, based out of California. Been in the business for 15 years. Started out in, just as a regular loan officer, and after the crash, found a niche specifically in the renovation space after having a background in construction from my family. And decided that this was the right area for me to be in to maximize the knowledge that I knew of these products and of construction. So, just kind of a natural, perfect marriage.
Awesome. Thank you. Scott, you're up.
Yep, Scott Nicholson. Been in the business 19 years right now. I am just a loan officer. I am in the trenches day to day and helping with clients and consumers and agents. And in particular, I've adapted renovation. I recognized years ago that it's immune to massive up and down movements in rates. It's immune sometimes to market conditions. There's always a time and a place where a renovation loan is going to fix something. So that's what I believe.
Okay. So you're both actively doing renovation loans right now?
Correct.
All right. So let's do this. My listening audience, is a pretty big cross section in terms of years or tenure in the industry, from somebody who's been in, let's say, 3 years or less, and then we got folks like you who've been in it a long time. And so it's not like renovation is new, right? I mean, it's been out there forever. Mm-hmm. Some people look at it, consider it, so there's a few different areas I want to touch on in our conversation today. Like, why reno, number one, who's it right for? We'll deal with the realtor issue, because as we know, when it's a rental loan, there's realtor misconceptions there. So sure. With that setup, is there anywhere, you guys want to jump in the conversation around a loan officer listening who might have been considering reno?
Yeah, I think the biggest thing is support. People always say they want to get into things, right? It's just how do you get into it? Where do you find the opening? You're right now, obviously rates dropped down a little bit right this second, but over the last couple of months prior to that, as rates started to increase, we started to see a lot more loan officers trying to offer that product out there, which is great. We want them to learn how to learn to do the product and do it properly. It's not the easiest thing to do. You have to learn, you have to take the steps to learn it. You really are going to be, you're going to have training wheels on for a while. So you want to find that person obviously at your company that knows it. But, there are a lot of people out there that could really help their businesses by adding reno to their mix. I think, it's not as hard as people think. I think what it really comes down to is building the right team around you. Once you have that team around you, it makes life a lot easier. It took time. It took time for me. I'm pretty sure it took time for Scott. I mean, it's not something that happens overnight. Oh, yeah. But the product can make you a specialist. It can give you a little bit of, a way to get in the door where a regular LO, all they got is a rate sheet and, donuts and coffee. Having a product you specialize in opens doors that you don't normally have, like other guys. So.
All right, Scott, what would you say to that in terms of how you got started?
Yeah, and I agree. And here's the thing too, what's really cool is it doesn't matter, the property condition, right? A lot of people think that the thing has to be falling apart. Well, it's a rental loan. That's not true, because you can do rental on new construction, right? And so it doesn't matter the level. I mean, so think of what reno can help, right? It could take a listing that can be sold only as cash, and you can offer a list with reno. You could take someone who's in the existing property for 10 years, and now the kids are getting older, the space is getting tighter, and the move up transaction just is not feasible, right? For many reasons. You can sit there on that one and add the second story, right? You can sit there and take that first-time home buyer, right? And a lot of people think this is the best loan for the first-time home buyer, like the 100% financing and little stuff like that, which I disagree with. And Geoff and I know Jeff's passion with this, with first-time home buyers. This is the greatest tool, the reno loan, for a first-time home buyer, one, to get in the market, right? And two, to build wealth through renovation. Bar none. That's the best. I think renovation by far is the best first-time home buyer program that we as an industry have to offer. So there's a passion there. There's a reason why. And I think pigging with Jeff's comment on, you have to add this to your quiver moving forward, because think of all of the internet changes that are going on, from agent space to our spaces. They're focusing on just the cookie cutter, high FICO, easy down payment, just vanilla stuff. So that space is getting super tight, super competitive in many different ways. And there's some big players that left the reno space. This whole space of reno is wide open to jump in and get in and create that niche. And then lastly, I'll add, is once you've got in there and you've found that mentor, like Geoff said there, found that support, right, from the back end of your bank. And if you can get in there, what a great way to get your agent meetings. And most of the time, LOs I see complain like, they got their lender. The lender's been there for 20 years. Hey, I appreciate that. I appreciate the loyalty. Let's say Geoff is that 20-year lender relationship. I say, keep you and Geoff moving on your normal stuff, but let me help you with your reno options moving forward. What a great way to segue into gaining agent relationships too.
Yeah, I love that. I love that. Before we segue into agent relationships, because that's incredibly relevant, why do you guys think this is the best first-time homebuyer option?
Well,
go ahead. Yeah, sorry, I got excited on that one because that one just speed up. Go ahead.
Let's go.
Well, I'll give you a perfect example. And Nichols Cross, right? I mean, first-time home buyers, Bay Area, found a piece of property, probably one of the worst I've seen in my years. Got it down to 365. I'll be fast in general here. We bought a piece of property for 365. We renovated it, got it back up to speed, put 300 out, 300 in the reno budget. So our acquisition was 665. So it's a big project, reno-wise. And the after improved value, now what they have today, now the project's done and I got them into a normal loan after the fact, $1.415 million.
Wow.
So think of that. They made almost $800,000 in their first transaction as a consumer.
Okay. So that's an awesome story, right? I love that. It's got a big impact. Mm-hmm. There's a lot of other considerations around that, because I mean, what experience do you have, or you're obviously kind of a reno expert, if you will, dare I say, you guys, so you know how to present this very well because you've been doing it for so long. But like the average first-time home buyer, right? How do they receive a reno pitch compared to a standard?
Well, I mean, it all depends upon how the table's set, right? I mean, if you got an agent that wants to just push them into the cookie cutter house and wants to get them in and doesn't want to present them options, it all starts there, right? Unless they've come consumer direct, where they're coming to you directly because they're watching HGTV and they've got these ideas in their head because they've seen what's possible. It all starts where it all begins at one point, whether that's coming from the agent where they're starting, or if they're seeing it on TV and they're going down that route. So, obviously most first-time home buyers do tend to go towards the cookie cutter house is already ready, it's already been painted, everything's ready to go. I think where Scott's really going with this, and what I think is why I think it's so valuable, is if I'm a young person and I'm looking, and millennials are our biggest piece of the market right now. if I'm one of those guys and I can buy a property and there's a potential for me to make instant equity. Now, Scott's example is the anomaly. I mean,
Sure.
I can only think 1 or 2 other times I've ever seen that happen. But I can also tell you, I could name probably 30, 40 people off the top of my head that I've helped create as first-time home buyers $20, $30, $40, $50,000 worth of instant equity. You're now setting yourself up for the rest of your life if you're buying that property correctly and utilizing the reno product and now creating equity that normally might take you 7, 8 years for you to build up. And now you could be in 3 years moving into a mover up property. And I think that's where it gets lost on agents and everybody else, is that this could be, you're shortening the cycle of buying a property when you put them in a rental loan if they're creating instant equity, because now they're ready to move up faster. So I think that's where buying this and using it as a first-time home buyer, there's so much value in using the product. Now, are we ever going to get to the point where we have a huge market share in rental? Probably never. But again, I just believe at least it should be offered to everybody, because a lot of people, a lot of buyers always, I always get when they're going in their move up property, I'll hear, why wasn't I told about this product, the first time around when I bought it? And it's because the lender didn't offer the product, or they were just scared of it. They didn't know. So it goes back to that thing again. It's about education. So we want to make sure that we can get to them. So by our LOs having that education, understanding the products, it gives more opportunity to those first-time home buyers.
Okay.
Yeah, those are really good points. And yeah, sometimes the nickel cross example, because it just happened, is a bad example because it's an anomaly. Most of the time, when a first home buyer comes in, right, they may have a gift, right, from mom or dad or whatever, and use FHA or a 3% thing or whatever they're using, right? And they're just kind of subject to the property condition, what the market is bearing in the neighborhood they want, right? A lot of times they want something in a neighborhood that's just priced, a more finished product just is more out of their affordability. They can't afford it. So what the rental loan allows them to do is to come in, and it opens their perspective or opens up property options for them. And in particular, if we get into a neighborhood that they like, and usually the like is always more, pricier or heavier price point than what they can afford or what we pre-qual them on. So they're going to get in neighborhoods at a cheaper price point, right? Gain it. And not only that, if they were get into the neighborhood and they could afford it, most of their cash is invested in the acquisition of just the property, just a normal property, and they don't have much rental budget, right? So it takes years for them to go, okay, we'll get to the master, we'll get to all that other stuff later as we replenish our reserves. And a first-time homebuyer, that takes a while, right? So in order to get a property in a neighborhood that you really maybe couldn't really get into in a school district, my wife being a teacher, that's really important. And I'm a big advocate of getting into a proper school district. So we can get into neighborhoods that we really don't financially belong in, opportunities. So, and then just right with the agent. I had $1 for every time I heard an agent kind of moan about a renovation. And a lot of times I go, okay, let's talk about that. So what do you mean? Like, well, I just, I had one, it just took forever to close and this and problems. I go, okay, so when was that? Well, that was, that was 10 years ago. I go, okay, it's a long time ago, but okay, so were you involved in the transaction? Oh, no. That was another agent in my office. I go, that's so unfair for you to say that, because, and understand agents, so this is educational, right? Geoff talked about that too just then, or he was talking about. Now it's a chance for us to educate the agents now. Who are sometimes our biggest non-advocates of reno. They just want it done. They want to get paid. Make it simple. Don't make it complex. And you get a chance to educate them. I go, I get that. That's usually sometimes a loan officer just hanging on to the transaction to get paid. So he's going to smoke and mirror his way through that. That's why sometimes either people get it, and I'm not going to jeopardize my name out there by hanging on to a rental loan. I'll give it to an expert, right? Or someone who hangs on to it. It gives us a bad name. So if my word of advice to your listeners, if you're going to get into the reno space, then have a commitment and learn and get that mentor and get in there, because it opens up a ton of space for you, option wise, with multiple people. And the consumer, just right. Last bit here is just right. I love working with first-time home buyer, millennial consumers that aren't tainted by the real estate agent first. And then when I'm done with the education, I'm done with a pre-qual, and I always say this, we can pivot on any property that comes up, we can buy. Remember that. So if we're going into a property, we're pivoting left into a traditional non-health and safety property, great. We're going to use this program, what we've already worked on. And if I get into a property that's going to have to take a reno, then great, we're already done. So I can write either offer, where a lot of bankers or loan officers can't. They're one-dimensional.
So where in the process then, it sounds like early in the process, let's just assume you're getting a referral from a realtor. Are you kind of like, seeding, if you will, educating the borrower on the potential of reno from the get-go?
I think you got to be careful with that though too, because you start to drop the reno piece on them without the agent being happy with it or being open to it themselves, then you kind of leave yourself out there. And next thing you know, you may not get another referral from them because that agent doesn't want to go down that route. So you got to have an open and honest conversation with your agent to make sure that they understand, because if they're just sending them to you and the referral's coming over and they think that you're just getting pitched on a regular, conventional deal, and all of a sudden next thing you know, they come back and now they got to look at properties that are completely different than the consultation they went through. You could be putting your foot in your mouth, and you don't want that to be the case. So you really got to start with your agent and make sure that they understand that that you're an expert at it. If you're at that point, right, so that they understand that they're not going to be in harm's way. And if they aren't an expert at it, then what they should really is to have that conversation. Is just to ask that agent, like, is this an option of something that you would consider helping this customer with? Did they express any interest in the HGTV type style house? I mean, that's where you really need to start, because that's going to drive the conversation. You start driving with reno and the agent didn't bring it up, and you might, like I said, you could bite off your nose and spite your face. So you got to be careful. It's a fine line to walk, because especially if they're coming from you and it's a referral to you, you don't want to cause an issue with the referral base. So right.
No, that's 100% correct. But also now you can look at it from different, let's say that referral came from an open house, right? For an example. A lot of times they have problems, like an agent will have problems on the conversion of those open house leads, right? So let's say I got 10 great clients from open house. Scott, can you qualify them, or whatever the situation there is? A lot of times, there's no loyalty there. Like, oh, okay, great. I want to use this agent. And so there's ways that you can work the reno into the conversation. And so, and make that agent right there an expert on finding those reno type properties too, right? So that way you can, because here's the thing. Well, if I had two buyers, a left and a right, and my left one is just strictly what's your rate and fees, right? Probably I'm going to maybe have a challenge, or a lower percentage of keeping that buyer for my agent. But if I had the conversation the right side, if I had the conversation with, great, here's that, but also let me understand, I'm an expert in renovation. So if whatever property comes up and I explain that becomes the stickiness that consumer can stay with us in our relationship with the agent and I, if that makes sense too. There's other ways to figure that out.
Yeah, let me see if I can clarify that for a moment. So in your scenario, you've got the AB buyer, one who's just rate and fee, and you're maybe going down that road of that conversation. But if you can open up and have a dialogue, like I like what you said, is that any property that comes on market, we can make an offer on. That's how you open up that conversation of a reno.
Yeah, absolutely. Well, and a lot of times when the direct consumer comes that way. One of the things, because they're coming at me with the reno mindset, so I'll take care of that piece and educate them and build the numbers and build, the TCA, all that stuff. But also, I have to make sure in that conversation, it goes, just because you can do it. A lot of times the consumer doesn't realize, you can write a paper or you can write traditional loans. Absolutely. So in my presentation, I show them, here's a traditional. So when they go back out in the street and start looking, they have their eyes for the entire inventory, good and bad.
Well, so let me.
It opens more options for them.
But how does a consumer know, right? Because if I'm putting my consumer hat on, right? I mean, I don't really know that reno's an option to buy a home, right?
Well, you would hope again. You're going to hope that your agent you hope the agent's having a consultation at the beginning.
Yeah, but by and large, they're not though, right? They're not.
Yeah.
Yeah, they're not sitting the buyer down going, okay, here's your options. You can buy perfect, pristine property, or you can buy one that needs some TLC, right? That's called a reno. Yeah. Most agents aren't doing that.
Right. Well, the other thing, we also see a lot too is we get consumers that'll come to us who, weren't schooled on the option of reno because they got an approval from a Quicken Loans, right? And then they actually go under contract, and then they find out there's issues with the property, and then next thing you know, now they're coming and they're finding us because Quicken doesn't do reno, right? Yeah. So it's kind of the other way around too. So like I said, I'm going to go back to it again. It's a fine line. You got to be careful how you walk it if you're going to try to guide that person into a reno. Most agents are okay with it, at least having the conversation. But I guess what I'm doing is I know you got a base of loan officers that are out there. I just want them to be careful of how they start bringing that up when the agent may not expect them to. So I guess the best thing I would recommend is if it's coming from a referral from an agent, sit down and talk with your agent to understand what they're comfortable with, that they understand, and just ask them, did you mention to them about the possibility of buying a house that needs a little bit of work, that kind of stuff, and see where they stand. And I think that's your best starting point.
Yeah. No, I agree. I would never bring up reno from an agent. I maybe don't have a great or don't know the whole relationship, but also too, it sets up, like Geoff has a great point, but as an LO, I'm going to sit down with the agent and talk through them and go, okay, so here's my playbook. What's your playbook? Right. Mm-hmm. And then all the times they'll text or call me and say, hey, I got a great client for you. Here's how it is. They just give me the notes on it. Right. Yep. And so I know to stay in that lane.
I think the point that I really want to highlight there that you're making, Scott, is you don't really present reno unless you've kind of had that conversation with the agent that's a possibility for us, right?
Right. Yeah, correct. I know.
Yeah, go ahead.
Yeah, I know several of my agents right now, and I have the green light to do that.
Yeah. But they
know my background.
Exactly. Yeah. You've demonstrated your expertise. You've talked about it. It's not like you're whipping this out of your back pocket. And like you said earlier at the start of this podcast, what I love about that is that if you want to differentiate yourself as a loan officer, hey, here's one way to do that. Pick a few agents that you think might get it, right? Might be intelligent enough to understand this option. And then, sit down and talk about when you get, there's properties out there that need help, right? Let me be your reno guy on that.
Yep.
I like that.
Well, okay. But think of where you can build with it, right? Because you can go in and take your reno background and be creative. So for an example, there's a couple of things you said right there is, well, how can I go to, so for example, let me back up. So if I have my rental background, I feel confident with it, I know what I'm doing, I got my support, I'm going to go out and teach my agents, right? That the option's there. So because you're saying, Geoff's saying, which he's 100% correct, and I'll never do it either. I don't lead in someone I don't know, right? In that, because I'm going to destroy that relationship. But there's the education opportunity for the loan officer. Get educated, get your stuff down, get your presentation, go into those offices and go, guys, let me open up some windows. For an example, if I was if I was new and I got my education, I'm going to go in and teach agents, like for example, both sides, listing agents. I'm going to teach them how I can help them get more listings, right? And get the property as is. So in the listing presentation, why my agent deserves it, right? Is we can sell a house as is. You don't have to spend any money to get it back into shape, right? We can take that listing, whereas a normal agent's going to do what? Well, we're going to have to sell it all cash. Might have to reduce it a little bit, reduce our margin, maybe look for an investor, right? There's giving away your equity position. It really doesn't need to be that way. Then on the flip side, I'm going to teach buyer's agents, right, how to get in and get the buyers more stickiness to you and create loyalty, because you're given a program that's going to open up the market and opportunities for them.
Mm-hmm. So do you provide some coaching then for agents on how to perhaps broach the subject of reno with buyers?
Absolutely. Are you kidding me? I mean, those are your lunch and learns right there, right? So just put your simple stuff. You can speak to both sides of the fence, listing, right? How to double in that transaction. I mean, it's super easy to double in. I mean, it's getting to be a bad name or a term out there, but let's say at least sell your listing, right, as is, right? Get that listing presentation. Now sell that listing. Heck, now they even plug a buyer in there, right? Or even create a buyer pool in there. So you can just keep going with it. Then you get into the buyer side, and you know how buyers agents are. They're tough, and they're frankly wore out of the market because they're being commoditized, right? And they go, oh my God, now it showed him for 2 months these properties, and he left me to go somewhere else. So imagine now you can have a different conversation at different value, right, with those consumers. As a buyer's agent, you can help with that.
Interesting. My wheels are spinning here.
Sorry.
How did you get educated, Geoff and Scott, right? So that you are knowledgeable on reno?
I want to be honest. It's what I recommend not to do, which is I went at it myself and just, I learned, and, you know, I brought some, I went out, I met with, I think I said this before, but you know, when you're looking to start, one of the things that's always good to do is go out and find a local HUD consultant and take them out to you know, breakfast or have a coffee, you know, just like you would with a real estate agent, and go learn from them as to what they do in their practice. And that's kind of what I did. I learned from a couple of HUD consultants and got an understanding of what they did. So it kind of gave me a starting point to know where to go. But when it came to the loan side, I'm going to be honest. I kind of wung it at the time because there weren't very many people in 2009, 2010 that had the same vision that I did, that reno was going to be where it was going to be the spot. So luckily I had at least an underwriter who understood it, which was good. And we were able to fumble our way through, a few transactions, which is not the thing I would recommend here, because it's not the way to go.
Right.
But at the time, there wasn't a big, unless you were working for, a Wells Fargo or a B of A, because they were really the big players in it. That they were the guys giving out the training. Otherwise, a guy like me working in a smaller shop, I learned on the fly. Were there mistakes along the way? Sure, absolutely. It takes time to learn these things. They're not easy. And even today, you still learn new things every day, because there's so many little things that pop up on these deals that you just wouldn't be able to position yourself for. But that's also why I said, in this type of situation, there's enough people out there now that are doing them. There's enough education out there from different lenders and investors, and there's guys like me who are out there doing trainings. I mean, there's people out there that can give you a little bit more nowadays versus what was available 10 years ago.
Yep.
So,
how about you, Scott? How'd you get so educated?
I'm the more conservative guy, so to speak. I had to sit down with underwriting and processor, in my branch at the time, and say, okay, so how are we doing these, or how, so I was learning from like other loan officers' mistakes. Okay, so why did that one go sideways? What happened there? So I was more trying to learn that way, how to structure it, because once you get a pretty good understanding in there, and like Geoff said back in this earlier, if you rewind here, just right, it's not that hard. Right. So all you're really doing is adding the property piece and some information to a normal credit transaction. Right. So that's So I would, me personally, you two. If I had to do it over again, that could fast forward. There's lots of great information out there, but I would go sit down with a great processor and a great underwriter and just pick their brains a little bit, watch a few files. I used to watch files. Because everyone's got to be tweaked here and there, and understanding why that, then ultimately it starts to come forward, and then ultimately, I got it. I get it now. And then just watch your changes as we move forward.
Well, both of you guys mentioned find a mentor and support. So depending on whoever's listening in your own organization, right? If you've got a reno division, you might have that mentor internally.
Yeah. No, without a doubt. And I've been on other, interviews when I've spoken to people, and I've said this in the past, man, if you got a problem or you're not sure what to do on something, call me. I'm not looking to recruit you, but I'd be happy to give you information, because I'd rather have you get the right info so you don't, fumble with one. And because the biggest issue that we run into, and it goes back to the same thing Scott and we both mentioned earlier, is agents having a bad name about these loans. That typically happens because somebody gave it a shot or didn't know what they were doing. And they said, oh man, I got reno on my rate sheet. Boom, let me give it a shot, and we'll see what happens. Kind of what I did at the beginning, right? Which again, I don't recommend. But that's 10 years from now, I would rather help you and say, hey, look, here's what I would do in that situation. These are the things you should look for. As far as I'm concerned, that's worth that's worth it to me. So if I can ever be a service, feel free. Share my number. I care less. I'd rather have you do it right.
I love that. And last time we talked, one of you guys mentioned who, from a loan officer perspective, if you're evaluating Reno, it's like similar to loan officers look for different niches, like, divorce attorneys and things like that. Well, that's not necessarily a niche that's right for everybody. So who would Reno be right for or wrong for, right, if they're considering it as an LO?
I mean, anybody. Take a shot.
It's a loaded question.
No. And this is a loaded response. It's right for everyone who's not closing 20 transactions a month and has, 1,000 agents and a 10,000 database past clients and all that. It's for everybody, right? Mm-hmm.
Yeah, I think.
Why would it not be?
Well,
right?
So my thought I'm coming from is because it takes a certain level of education, understanding, the ability to educate others, and right. So
yeah. Well, yeah, I think this is such an important topic right now that we're discussing, because if and I think we're all agree on just how much the market's changing with technology, right? Mm-hmm. And that space is sucking up. It's taking market share. I mean, now as we speak, of your just vanilla, stuff, credit files, paper stuff. Yep. But so people have to make adjustments, counter adjustments to that. And if they don't, then if they're doing 10, they'll go to 5. If they're doing 5, they'll go to 1 or 2, right? So how do I keep my pipeline active and building and my career surviving? Just as these big companies are investing billions of taking your market share and streamlining the process, all that stuff, right? What are you doing counterproductive to that to maintain or keep your, hand on, your business, right? And that's why I think Reno is such a huge place. Well, here's the thing too. The stat, my 52 age is showing. There's a 19, I think it's 19. One of the number stats I gave to a big realtor presentation was, I showed them 2 numbers, one was 1996, half of all homes built were built prior to 1996, right? I think, forget the stat.
Yep.
But I was blown away when I was doing my research. I was like, oh shit. So those houses we're getting some old inventory coming up, and they're just getting older and older and older.
Right.
So think of just the need for the product as we continue to move forward.
Mm-hmm. Mm-hmm. Yeah, it depends. I think that's also, somewhat market dependent. It's changing a little bit from what it once was, but it definitely was somewhat market dependent. That's why, if you look at the endorsement schedule, you'll see the majority of these are done in the Northeast. But that's also only one area you're seeing. You're not seeing the home style, report, which tends to be in other areas, such as California, because of the higher loan limits. So, you really, if I'm an LO, like I said, I think I've mentioned this before, I'm looking to think outside the box, and Reno is one of those type of areas to do so. But it's also one of the areas where I also like to look outside the box of where I'm going to go find that business at. Right. I've always been a huge proponent of going after contractors. Contractors they're underutilized. People don't go after them for the business, and contractors don't know these programs exist. So it's kind of like, you want to bring these two people together and let them know that, hey, we got financing options to help you do smaller projects. Like the guy who might be doing $30,000 projects because he's only got the GE Capital card. Maybe he wants to do $50,000, $60,000, $70,000 projects, but he doesn't know that these financing jobs these potential is out there by using a rental loan. So that's another way to help an LO out and drive some additional business and bring business in that they're not normally looking for, because that business is always there. So that's another way to look at it as well.
So how do you tie in that person into a purchase transaction, or are you also kind of dipping into the refi pool there for home improvement?
Definitely a refi pool, man. We do a lot of. You'd be surprised how many refi. When everybody says, "Oh, refis are dead because rates are rising," I mean, I'm sitting there salivating, because in all honesty, those projects don't go away. The homeowner that wants to go, do an ad level and put a $200,000-$300,000, addition onto their house because they're sitting on a rancher in the smallest house in the development. they 9 times out of 10, they're not sitting there with $200,000 or $300,000 in cash to do that project.
Right.
They need this project, and that's why you go after a design build firm. Design build firms they're the ones doing those type of projects. So, yes, so definitely on the refi side. It's definitely obviously there for the purchase side. Never, always going to be there for the purchase side. But you're going to see a lot of bigger projects on the refi side. So definitely a definite avenue of business that shouldn't be ignored.
And even pigging on that with Geoff right there is, in California, if you kept up with those big zoning law changes that California has passed just to free up the affordable and help the affordable housing, right? So they've now streamlined the ADU process, right? Auxiliary dwelling units, the granny units, right? So that's something in the reno space that is really catching on fire, and partner yourself with architects, right? And getting into that space to where you can now, I've referred my architect's busier like he's never been, because I keep referring him out to all my ADU. Or I want to go in ADU. I got to put grandma in the backyard, or I got to move the kids back in there because they can't afford California.
I just got a nice visual of put grandma in the backyard. We're not talking about
you got all the baby boomers, right?
Yeah.
Well, above ground, Seth.
Above ground.
Yeah. Well, that's right. Yeah. Grandma's still propped up in the chair.
Multi-generational.
But think of that. Run with that, for example. Some of the housing market has stalled out because the Prop 13s here in California in particular, right, has caused more damage because now the baby boomers now can't afford to move out because of their tax bracket.
Right.
So what eventually you either have to, one, because I've done it personally with my mom or my dad, is either I got to get them into a home, or I got to make some accommodations, right, to appease that in medical or those getting older, right? So that's just going to get bigger and bigger and bigger.
Do you guys want to briefly touch on? No, I love that example, and so and I'm glad we mentioned refi, because that's a part of it. And look at you talk about demographic, housing market info. People aren't moving as often as they used to, so there's people staying longer. And you look at some of those older properties, and they're everywhere in the country. They're even in SoCal. We know where they are, those areas. And if you give people paint a picture for them that, hey, you love your home, you can stay here feeling like you kind of outgrown it. Well, you don't need to sell and lose that tax basis and all that stuff. Yeah, do a friggin' remodel, addition, whatever.
No doubt.
Right.
I was going to ask you guys.
ADU in there.
Yeah. Do you want to do a quick overview of the, if I understand this correctly, 3 different versions of Reno, right? Homestyle, 203K, and VA.
Sure. Yeah.
Who wants to take that on?
Go ahead.
Yeah, so you got your FHA. FHA comes in 2 flavors. You got your full 203K and your limited version. The full K allows you to, basically do projects as large as you want, up to the county loan limits, and then those county loan limits increase for each for each additional unit above 1, up to 4 units.
Okay.
The limited version, formerly known as the Streamline, allows for projects of non-structural use up to $35,000. So FHA is a great product. It's always it's been the mainstream one for the longest time. The one that's actually gotten a name, even though there hasn't really been a name out there for it. But 203K is the one everybody knows. Then you got your Fannie Mae Homestyle. Your Fannie Mae Homestyle is gaining a lot more popularity for a lot of different reasons, mainly because, you can put down 20% and avoid mortgage insurance, or, you can do, as little as 3% down, using Home Ready with it as well, or using 5% down and just having a reduced MI. So there's a lot of different variations you can work with. Plus, Homestyle also allows for you to be able to do second homes. So something that's in a resort area, or, for me, that's somewhere down the Jersey Shore. And then, obviously you can also, with Homestyle, you can do an investment purchase as well, or refi, I should say. You can do it both of those, which is nice. Now, typically we don't look for that to be for the guy who's looking to fix and flip, because we don't want to get ourselves into an EPO situation. So it's really for that guy for the buy and hold. But it's a great product for the investment properties as well. And then lastly, the one that's starting to gain a little bit of traction right now, I shouldn't say a little bit, gaining more traction, is the VA renovation product. And the VA renovation product is very much in its infancy. There's some lenders have been doing it for a couple of years now. But if you kind of look around, there's not really a hard and fast rule when it comes to the amount of work that you can do. There's some companies that are limiting it, 30,000, 35,000. You got other ones that are saying there's no cap. So it's kind of, that one's more the wild, wild west right now. So you got to kind of pick and choose what lender you're going to work with when it comes to the VA reno, but the rest of them have specific guidelines. So yeah, those are the three main products right now. And hopefully we'll start seeing some more products, coming down the pike in the reno space as well.
Got it. So Geoff, are you a broker?
No, we are a direct lender. Actually, I apologize. So we're a direct lender. We do have a wholesale channel through SunWest, which is our broker side. So we do offer those products through there as well.
Okay. Obviously, if somebody's working at a retail bank or whatever, then they're limited by the options they've got wherever they work currently. But okay, correct. Some people can broker out though too as well, so that might be an option.
Yeah, absolutely, for sure.
All right. Anything you want to add to that, Scott? Or are we good there?
No, that's spot on. Pretty simple.
Okay.
Yep.
So in the last couple of minutes we have, what I want to do is talk a little bit about branding, because we've been talking about this as a niche so far, and you've referenced a couple of times, right? Sell homes or buy homes the HGTV way, and that's grown obviously massively in popularity. I see a couple of LOs popping up here and there with a kind of a brand around that. I see people kind of trying to do that, but I haven't seen anybody kind of doing it, I think, at the level you have. And you've got this brand, Renovate This, right?
Oh, yeah. Okay, gotcha.
So explain to me what you're doing in terms of what I see on the outside, and you can kind of adjust course here. But my perception is you're building a brand around renovation, right, to become known as the Renovate guy, to attract that business. So what are you going to tell us about that?
Yeah, honestly, it's funny. It's not so much to attract the renovation business right now. What it is, it's really meant to be an educational resource for anybody who's interested in building wealth using real estate. So we definitely talk about renovation loans. We're going through, we're showing people the beginning of a project all the way through the end of a project. We're showing inspections. We're trying to show all the pieces of the puzzle when it comes to doing these things. We're also showing people how to fix and flip properties. We're showing just simple home inspections, and we're doing interviews, same type thing. So the idea is to create a spot that, people can go and get information to understand how these programs work and how they can build wealth using real estate. So we don't brand it. I mean, the one good part about it is you'll never see me talking about, my mortgage company or anything like that. So loan officers in other areas want to use the information and forward it out to their customers and say, hey, this might be a really good idea. Look at this quick tip on how to use Reno. You won't see me sitting there going, hey, call this number, for a loan. It's not the idea. It's just like I was telling you guys earlier, I'm going to provide education so that more and more people consider using these products when they're looking at wealth building strategies. Because I honestly believe that in today's market, with the way that our kids are coming out of school and college, they're coming out with tons and tons of debt. And one of the fastest and easiest ways that they can get out of it quickly is by, I'll give you an example. I did this for a student recently. He's at Temple University. He went in, we went to do a renovation loan for him. And he did a reno, he created some instant equity, and then he also is renting out rooms in the property. And at the end of the year, when he's done his school and graduating, he's now got equity and he's got a base of income coming in from this property. Now, that's a smart millennial, right? I'm not to say they all.
True.
These guys and kids and whatever to figure out ways to build wealth, and that's really the idea behind Renovate This. So I appreciate bringing it up.
No, that's great. So you're making this available for, I'm trying to think how to answer this question, because the first thing that came up when I see what you're doing is why, right? Because it's kind of flies in the face of, and you're nodding your head, you're like, yeah, why? Why would you be doing this, man? There's got to be a payoff on the back end. You've got to be attracting business to you.
So as a byproduct, I definitely get some phone calls, this and that. But it's funny, people ask me that all the time. They're like, well, "Why are you doing?" I said, "Well, the Gary Vee book. It's jab, jab, right hook.
Yeah.
Jab, jab, and I don't know my right hook yet. It's eventually, yes, I'd love to make money off of it. Maybe it's advertising on the site, something like that. But right now, it's strictly education. We want to get people understanding these projects are out there, that these programs are out there, that the money is there to be made. that so that people can get out of their day-to-day job if they don't want to be in it. They want to use real estate to build wealth. Like, it's there. So you just need to figure out how to go use it and how to get it, right? And that's what this is all about. So yeah, so no, I really don't have a right hook yet.
But you're in your local community, if I'm correct, right? On this brand, interviewing people, doing videos, like you said, before and after type stuff, right?
Yeah.
Okay.
Yeah, absolutely.
Yeah. And I'm going to put links, by the way, if you're cool with that, in the show notes to your main page. Then you got YouTube. You got some great videos, by the way, on YouTube.
Cool. I appreciate that.
Yeah. And so that goes to my point earlier about how I've seen some LOs are trying to brand this and be like, hey, you see how those homes they buy on HGTV? Did you know they do that because they got a rental loan in most cases?
Yeah. Well, we're trying to do that too. I mean, we are taking projects, and you'll see one we're getting ready to roll out soon. It's going to end up being like a 30-40-minute episode where we're actually showing them from the beginning of a project all the way through them finishing it and moving in. So, I mean, it's the idea is to get to that point and to really show people what's possible. And that's the idea behind the whole thing.
What percentage of your business is reno, roughly?
As a group, I would say, because, obviously Scott and a couple other guys that we have, I would say reno probably accounts for probably about, I'd have to look, off the top of my head, I'm going to guess, I'm going to say 35%.
Okay. I know I put you on the spot there, but
Yeah, no, it's okay. I don't think it's 50. I always wanted to be up at 50, but I think we're at like 35. I'd say probably 35 to 40, maybe somewhere in that range.
All right.
Yeah. Mine's actually much higher than that.
Yeah.
Yeah. Mine's high.
And you're in Orange.
I think mine's 50 Orange County. Mine's north of 50.
You're in Orange County, so we're talking right higher loans, higher reno amounts, all that.
Well, let me clarify. So, through Geoff again. So I have California, Washington, Nevada. So I service those states. So I get them from Reno, Nevada to Tacoma to Orange County. Orange County is a lot tougher.
How so?
It's nice to do the higher loan amounts. It's just tougher. But in the other places throughout California and other spots, it's, at lower price points, it's easier.
Mm-hmm.
And I'll segue into one product that our space is, direly missing, and it's being worked on as we speak. Geoff is just a jumbo reno to open up some of the higher price points, Seattle, Orange County, LA County, and so on and so forth. Lots of properties there that need love too, that are just at higher price points. All
right. So let me connect the dots here, and it's okay to, talk about any type of platform you might have, Geoff, that might be available for loan officers. Cause I'm trying to understand where Scott fits in. Like, if you heard him just kind of articulate how he's attached to you. So explain that.
Yeah, so we hooked up a little over a year and a half ago or so now, and we have a team that's nationwide. So I'm in Jersey. We have a couple other offices around the country. We created a platform called Mortgage Possible, which is our retail platform. But Scott, myself, and a couple other gentlemen are reno specialists. So we created a platform where we, obviously have the infrastructure to be able to handle these deals. But we've also created a platform so that if you're a loan officer who wants to learn more about it or wants to get into it and doesn't want to fly solo, they can come in and they can actually utilize our platform where they have a reno specialist next to them during the entire process.
Okay.
And then they get education, they learn how to do the projects, learn how to understand how to really market them, how to get out there and build their business. In my last company, I helped branches that were doing zero reno, get them to 15-20% of their pipeline being reno. So it's a big number when you start really adding it in, and especially in a market where you got, market compression and everybody's fighting for that vanilla deal. When you can use reno to offset some of that, those lower margin products, it does help to really build your bottom line, but also make you more competitive in the other areas as well. So that's kind of our platform, and we've been, adding branches and, adding and singular LOs around the country, trying to build that up, utilizing the skill set.
So what are the options on that? Does somebody, you say added branches, does that mean they hang their license with you? And then is there like an LO individual option on a referral situation, or?
Oh, no, it depends. I mean, it depends on the state, and it depends on licensing requirements. We have some guys that are one man branches, and obviously that's not our obviously ideal situation. But we have been adding branches around the country. So, theoretically there's an opportunity to plug somebody in different states all over as we're growing. We've been on pretty significant tear as far as bringing people on board. Branches being loaded all over the country. So as that continues to hit, we'll have more and more opportunities to plug local LOs in certain areas into branches, or existing branches that would like to just add this as part of their, to their platform that aren't really doing it now.
Right.
They can bring their production over, and we can help them to grow it by utilizing these products.
Awesome. So. Cool. Good. And as far as, like I said, links in the show notes. For those who want to learn more, connect with you, what would be the best place for them? Because I'll put links to the YouTube channel, but where else should people want to contact you?
Yeah, well, I'll give we can put up my personal Mortgage Possible site, and I wasn't joking earlier. If you guys have a reno deal and you got issues, do me a favor, call me. I will help you. I mean, I'll do the best I can to answer every question. But if you have something that you don't know where to get started, or you need some direction, just call me, 609-217-9409. And Geoff, you can put that in notes if you want. Call me, text me. I will be happy to help. I would rather be there to help you versus letting you fall flat on your face and hurt the name of our products. I want you to be successful, regardless of what company you're at, because if you're successful, that means that your agent's going to talk about your success, which is going to then whisper down the lane, helps me and Scott and the rest of us in the renovation space.
Mm-hmm.
It becomes a byproduct of everything if you're successful. So I'd be happy to help. I mean, unless 1,000 people call me tomorrow, Geoff, I may have a little bit of a problem. But otherwise, I would be happy on an individual basis to help when I can.
Yeah, we're going to put links in there for all that kind of stuff. The website is renovatethis.com.
Yep.
Plus, there's a Facebook presence you've got, which is cool. You got a lot of good content up there. Yep. So we're going to put links in all that kind of stuff. Mr. Nicholson, do you want anybody to reach out to you, or?
No, and Geoff says that it's the real deal, and I feel the same way too, because I still have those battles with those agents to where, this is, we don't want to do this, and we don't want to go down that path, and that's because of what we talked about earlier in the show. So yeah, if they want to reach out, and hey, I'm on, because Geoff's on the East Coast, I'm on the West Coast. Mm-hmm. So shoot, if they want to buzz me on my cell phone, that's fine. So here's my number, 562. Okay. Or you can put it below in your comments. So I think you have my cell.
Yeah, I do.
So if they got an issue, or where do I start, or how do I give a realtor presentation? Because if we can grow the space, which is really, this is something you said earlier, it's been around for a long time, but you'd be amazed at how many comments like, I've never heard of this. Like, it's just amazing. I still get these calls every single week, right. So yeah, we can all work together to get the word out, and we all can be professionals in the space to help grow that.
Yep.
Absolutely.
Yep. And the pie is big enough. Out. Amen. We'll do that. And the pie is big enough.
Geez.
Yeah.
Absolutely it is.
That's awesome. All right. Listen, guys, I know you're busy and it's Friday, so we want to let you guys go, get it done, and I guess go catch up with the Masters, right, Scott?
Correct.
All right, man. You got any predictions, by the way? Huh? Right now, on air, prediction.
Oh, wow. Yeah, on air prediction. I'm going to go with Justin Thomas.
Oh, whoa. All right. There you go.
Yeah, throwing that out there.
All right.
Right?
Fair enough.
Second, Phil Mickelson. There you go.
Ooh, that'd be good. How many has Nicholson got?
Phil the throw.
2?
Yeah, he was one back to start the day.
No, I mean, how many green jackets does he have?
Oh, yes, he has 3. And by the way, if he did win, he would beat he'd break the record of the oldest major champion.
Wow. Wow. Good for him. Good for him.
Tom Morris did it in like 18 in the 1800s or whatever it was. And Julius Burroughs, I think, did it in the 60s or something like that. Or whatever. So,
back with the wooden clubs back then.
Yeah. I was just a wee lad back then hitting a feathery ball.
All right, guys. Listen, I appreciate your time. And as always, listeners, thank you for tuning in. If you like this episode, you know what to do. Leave a comment in the show notes, and we'll see you on the next one.